Samir, historically, the IT/ITES sector has always been one which looked externally for revenues, profits. And then when our sort of bandwidth costs started um, decreasing and we had the inflow and influx of app companies, including yours, grow in the local market, the philosophy that the IT/ITES space echoed, which was, you know, reaching external markets first, seems to have inverted. Are we again, though, looking at an inflection point and perhaps, if not an inversion, a rethink about the importance of global markets in the portfolio, so to speak, of internet companies born and bred in India or branded in India and servicing primarily Indian customers, whether on the B2B side or B2C side?
Thanks, Ivan. I actually don't think of this as an inversion or a second inflection. I think of this more as a continuum. So in the early 90s and early 2000s, or 90s and the early 2000s, as a market, we were trying to prove our prowess to the global MNCs, saying we can build world-class tech for you out of India. And I think we did really well, right? I mean, the IT industry brought in incredible amount of FDI, jobs got created. And I think the world started looking at India as a place that could build great tech. But we didn't have an internet ecosystem. We didn't have cheap smartphones. We definitely didn't have broad-based internet access. Starting around 2010, FDI started coming in, and once the capital was available, young entrepreneurs have really sort of opened up the market. And then you had very cheap internet and smartphones come in. So I think this was the continuum. Now that we've proven out we can build world-class product companies out of India using FDI, I think the next logical step is that we will try and build global companies out of India. I mean, it's a three-step process. And Japan and China and others have gone through it as well. And I think it's but natural that a bunch of Indian entrepreneurs will try and go global.
So just on that question, on a scale of 1 to 10, where are we on the maturity index, so to speak, of our app companies? And I know different sectors, different maturities, but overall, how do you place us, how do you rank us as an economy which is ready to travel to the world?
So I'll use a quick analogy, right? I grew up in Bombay, and for those who are from Bombay in the 90s, I learned driving in a place called Sakinaka. And if you learn how to drive in Sakinaka, you can drive anywhere in the world. And I think Dara said this from Uber yesterday, or a couple of days ago. If you can succeed in the Indian market where the consumer wants everything and wants everything for free, but you can build for the Indian scale, it's much easier to go abroad because the scale's already proven out. The quality of service that's demanded is very, very high in India. So I think I fancy my ecosystem partners to be able to actually scale out into other markets in the next 5 to 10 years in a very substantial way. I think many will.
So 1 to 10, maybe a 5 or 6?
8.
8, wow. Okay, so this brings me to a question you're asked in every forum, but I have a slight nuance to it, which is you have reverse flipped and come to India, and clearly you're looking to build out from here. You've previously said that part of the impetus is obviously that local IPO, local brand recognition, all of that sort of is a virtuous cycle, which you'd seek to naturally exploit. But why did you have to do it in a way where you had to localize the entity entirely as opposed to push for local listing, perhaps, and wait for a few years for that reform to play out? Just in the way that we are exploring listing of Indian companies abroad, that dual listing question of being able to do it both ways. Why not take that route? Just a question as a precursor to the rest of the segment.
Nuanced answer. So one, entrepreneurs in India now want to list in the market because I think more and more, and we always wanted to begin with. We were domiciled in India, then we merged with Flip, so then we went Singapore, we come back. Our business is so heavily regulated, it always made sense to be here. as a holdco. It always made sense to actually list here. Now, if the investors are sitting in or prefer jurisdictions like Singapore and Dubai, until IFSC takes off and we have easy flow of money for capital investors, the fact of the matter is those jurisdictions are easier to bring in a lot of FDI from. But until then, back-to-back, SEBI would allow us to actually list a company based in Singapore here. You're waiting on a second event, right? So I think it's just tricky,
Chicken and
waiting
the
for
egg.
something you don't control.
Yeah. Sort of chicken and the egg, would you say? Or
Chicken and two eggs, right? I mean, it's being allowed to list from outside as well as convincing investors to come inside. I mean, they're two separate problems.
yeah, but you seemingly have pulled off an incredible feat of paying 8,000 crores in taxes, and must have been an interesting conversation internally, a corporate strategy conversation that one would love to be a fly on the wall for.
No, I think a big shout out on this one in particular to Walmart, but all our investors. I don't have 8,000 crores to pay; they paid the tax. Again, it boiled down to two things. One, they had to have very strong conviction that our terminal value will be a lot more than the 12 billion that they paid. That's the tax basis, the market value on which they paid the tax. So if they think in the long run we can be a 50, 60, $100 billion company over the next so many years, then it makes sense to even take the hit. And second, again, if they believe that we'll get the premium in our home market, where hopefully a lot of people use PhonePe and therefore will relate to it, then it makes logical sense.
So about this value, 50, 60, $100 billion business, where do you think this value is going to come from in a very competitive segment that you operate in? And I know you're many things. You're also an aggregator of various services, and you can unbundle that. But this is also a very commoditized segment. A lot of people are working in the payment space. There's a lot of consolidation happening, of course, but commoditized to the extent that you're fighting for thin margins. And this is also true of your latest venture, the Indus store, where the proposition, in fact, rests on the fact that you don't charge a margin. So the value that you see accruing to your various business interests in the long term, where do you think the drivers for that are going to come from?
I think FMCG shown us the way, telecom shown us the way. We can't celebrate the idea of having a quote-unquote captive market of 1.4 billion citizens and then ignore the reality that when you multiply a really large number with a very small per transaction or per order, or whatever have you, per download, you still get a very large number. So I think there is a population dividend there. We've already shared publicly, we have more than 500 million registered users. Outside of China, that's never happened on the internet. I'm talking about within the country, right? So yes, UPI MDR is zero. Yes, the per transaction fees is low, but it's not zero on peer-to-peer transactions. It's not zero on a lot of other categories. And so when you multiply that with 250 million transactions a day, you get to profitability. Our core segment is there. Now, if you look at the other businesses, we think of it as actually bundling, not unbundling, in that people who are doing digital payments frequently with us, we have a rich data profile about them. We know what insurance products to upsell, loans. They're entering broking in record numbers. We're seeing that with the broking segment. These are all naturally margin positive. Even with Indus, I think we entered because we want to burst the myth that you need to tell app developers how to build their apps to make money off it. In-app payments and app store distribution has nothing to do with each other. That is just time and place when the app stores came into play, they could dictate terms. But I don't think there's any good reason why PhonePe should tell an app developer what PG they should use. I think we make way enough money on marketing there if we get it right.
Sure. Just 2-3 questions related to this then. Is this strategy something that would be consistent with a strategy that you would use or apply to developed markets? Because if you have to change your strategy from, and we all know that India is a user growth market for even many foreign companies, app companies operating here, some have matured, and a couple of digital advertising majors, of course, are doing fantastically well. But a lot of them are sort of here for the user base and revenue second. But one imagines that if you are flipping the proposition to, so to speak, you would be perhaps also thinking about the Western market or the more advanced market as a different proposition strategically.
So I think it goes to our sectoral role. Ultimately, we are building distribution platforms. We are not manufacturing or designing products. So if you can reduce the rate of, say, forex transactions, or you can reduce the rate of digital payments in India, there's no good reason you can't operate at that same philosophy or with that same philosophy in every market. And that's what we would strive to do. I think that's actually inherent in how fast technology is advancing and how low the costs are becoming. I think in a lot of developed markets today, people are paying way more for technology use than they need to. And that's just because there's been no challenger from outside, right? These same giants that you're talking about operate on very different unit economics in their home country now, but they charge a premium outside because there's no challenger. So the reverse still holds true. And I think if we were, for example, designing fashion brands or electronics, there's a case to be said that if your quality is high, you can charge the Apple premium, and if it's lower, then you can actually charge lower. But if it's technology, you're building bits and bytes. I really would like to believe that we can offer the same relative pricing in foreign
So
markets.
specifically on aspects like cybersecurity and general levels of hygiene that you have to ensure that each app has on your store, is that also like a flat cost no matter what the scale and size of your distribution is? Or one would imagine that that requires a consistent level of R&D and investment to keep up with your own distribution success. I mean, you maybe become a victim of your success in this instance.
So if Indus is to be successful in India, we would need to check all sorts of activity across a very large number of apps that are global. So you're taking the cost hit regardless of whether you make any money in the Indian market. The incremental cost of trying to take something like Indus Global is actually very low if you think about it. So yet again, we bear disproportionate cost of building for the Indian market to begin with. And this is why it's actually it's a tough market, right? The 8-year rule, VC rule, doesn't work in India. It takes 15, 20 years to get returns on capital in a meaningful way. So we are taking that view because we got lucky in that we have incredible long-term strategic investors. We would not be able to invest in something like Indus or PinCode, which is like on ONDC, with the conventional VC model. It just wouldn't work.
So two questions. You raised ONDC theme. So, what do you think about ONDC, which also seeks to basically work in a margin-free world and also distribute, say now, fintech products and so on and so forth seem imminent on the ONDC platform. So is this competition, healthy competition, signaling value? What is it to you? And the second question relatedly, why do you think distribution businesses from India, taking from what you've said, that we get distribution right here, we can do it anywhere in the world. Why do you think distribution-aided businesses haven't really traveled so far, and it's been basically SaaS-driven export story from the Indian app ecosystem?
I'll answer the second one first, just very quickly. I think you have to build enough brand equity at scale for people to say, we welcome you. So just as much as India's time has come and people are looking at India differently, particularly from MENA to Southeast Asia and parts of Europe, I think there is a belief that the Indian brand has arrived. And when that happens, along with it, you will see Indian companies also being able to actually get out there and say, PhonePe wants to offer services here. UPI is leading the way, right? They're trailblazing. 10 years ago, if somebody had told you a homegrown network that doesn't exist today will be available for citizens to pay at the Eiffel Tower, I would have laughed. But it's happened. So I think we saw this with Japan in the 80s. People wanted Japanese brands, then Chinese brands also expanded out. I think Indian brands will get there. I think that's just passage of time, to be honest. On the first one, actually forgot, sorry.
ONDC.
ONDC, yeah. I think there is a lot of signaling value or signaling happening. Um, we were very transparent both with the ONDC CEO, DPIIT and others. We are entering because fundamentally we want our offline businesses to learn how to compete digitally should they choose to. I'm fundamentally not into anything that is free. And what I really liked with ONDC is DPIIT clarified, and I think quite publicly, market forces shall prevail on pricing. The one thing they have not done is prescribe pricing. What they're saying is don't create artificial barriers to entry, whichever segment you're in. And this is my same reason for launching with Indus. I don't have a problem if Google charges 30%, Apple charges 30%. They could charge 60 for all I care.
Correct.
If there is free competition, then the right price will reveal itself.
Yes.
And I think that part ONDC is trying to solve for. In certain sectors, it is, I dare say, exploitative. I think it's just in the absence of enough competition.
Yes. No, I really appreciate that response as someone who's also trying to think through what a free market in the digital space looks like, because it's still a well-regulated market that we need. Freedom doesn't mean absence of accountability. But just pressing you on the globalization point and how SaaS businesses have traveled, do you also feel like at some point there is a barrier to talent in the sense that product managers, for instance, if you talk to any gaming company, the most valuable asset for them, perhaps more than the user now, is is the product manager. And if we want to go global and maintain those characteristic traits that the world associates us with quality in the digital sphere, which has unfortunately not happened in many areas, including social media, which is the largest perhaps area in the internet app ecosystem in terms of users after transactions. How do you bridge that gap as industry?
So I moved back from the States in 2010. And in our first venture, I remember trying to actually find engineers, designers, and product managers. Engineers, there were plenty. Good quality, very, very good quality engineering talent. Design was very, very poor quality of talent at the time. And I think that's because we weren't rewarding designers enough back then, to be honest, right? If you found a designer, they were typically somebody who couldn't get into engineering. Today, you have really, really good quality designers as well. And they're building not just for Indian startups, they're building for global companies as well, sitting out of India. So I think the design talent shot up. Product management, I think we have some really good quality mid-level product management talent. Product strategy is different. And that's again, product managers also need to understand business, not just tech and design. And it's a really hard role because conventionally or traditionally, engineers coming out of the IITs are not taught how to think about market opportunity and where value lies. I think product is great. I'll say something a little more controversial. I'll say Indian companies will be able to deliver very high quality products for the global market. But I don't think the urban rich in India will give the Indian brands enough of a chance. I say this often, and I say this particularly in Bombay. I grew up here. It is very, very hard for people in building for the Indian market to penetrate this one market. If there's a global competitor, people assume the quality is better, and that's just not true. You can see it in the e-commerce space, you can see it in the taxi cab space. The number of times somebody says, I'm calling an Uber, but they call an Ola. It's just deep-rooted here. We see this in our market share and payments. So I think some of it is us starting to feel actually proud about using the names of the brands that we actually use. The market shares obviously tell you in every single sector. But I think once we start believing that and saying we have the world's best quality, I think everything else will also start.
So let's switch over now. How do we get our regulators and administrators to start believing some of this and helping us globalize, make in India for the world? You need, particularly in fintech, to really think through some of the fetters we still have despite liberalization. I think we've had 30 years of liberalization, but in financial markets, the liberalization has been incremental at best. And its reform has been driven by adverse events, And perhaps that's not an appropriate strategy to think about the next 10-year window that we have to leverage the kind of brands and quality talent we have now in the app market.
So I think you're half right in that compliance regulation has been driven when things go wrong, and that's actually just the life cycle of how compliance-linked regulation comes in. But I would like to give the government and the regulators a shout out on three specific things. One is IFSC. So while we were doing our sort of ghar wapsi and moving our domicile back to India, um, it was really starting to come to life. And in the last couple of years, they are making a very concerted effort to bring the domicile of Indian companies back to IFSC at least, with all of the tax ops, all of the capital gains benefits, etc. I mean, the papers are out there. I think it's a very progressive step. And I think it'll really, it's also the first time that we have alignment between the regulators and the government that Indian companies should be able to also float some of their shares in foreign markets. So that also opens up a sort of enterprise value unlocking opportunity. So that's one, which is IFSC. Second, I think there's a template in there for financial services, which is they have sparks from RBI, SEBI, IRDA, everyone working together. So the licensing window and the regulatory approvals are coming much faster than ever for businesses like ours that are working across sectors. And I think something like that, in fact, a bunch of us in the industry have requested the finance ministry and the regulators to set up some kind of a window where this kind of like bundle or cross-regulatory sort of approvals and clarity can come in faster. I think they're moving in the right direction. The intent is there. RBI has a fintech committee or department. SEBI has got one. So I think they're trying. And I'll say this, I'm tracking a lot of the global markets because we are trying to go global. And India is way ahead of the curve in terms of at least the regulator opening up FDI, product innovation, business model innovation to fintechs. I think we do complain a lot. We are a noisy startup industry, as we should be. Startups are supposed to be disrupting. But I think on the balance, whether I look at UPI, whether I look at how lending is opening up, if I look at IRDA's recent reforms, I think they're all very, very sort of progressive. The third thing that I think specifically they've managed to do really well is I think they've looked at the US model where there's very different kinds of concentration. They've looked at China, they've looked at other markets. And I think India's evolving its own sort of strategy slash philosophy around the role they want the tech industry, particularly those of us in distribution, to play.
Stewardship.
It's not just stewardship. The whole idea with the DPI, right? I love some of them. I'm not a big fan of everything being a DPI, but fundamentally what they're saying is the critical layers we will at the very least design, for example, ONDC. In some cases like UPI, we will build and own. And I think that mitigates a lot of risk and gives them the ability to actually shape the market.
So let's talk about that risk, and also let's talk about sandboxing for a second as well, because IFSCA obviously has a sandbox environment. Are you happy with the way sandboxes are run in India, in fintech or in other spaces? I mean, what are the evidences of success that you have to demonstrate in terms of not you as a company, but does it work? Or if you were to do it better, whether you call it a sandbox or an innovation sandbox or a regulatory sandbox, whatever it may be, how can we make it sort of a little more alive?
So it's not India specific. I think sandboxes globally are hard. There's a couple of very simple reasons why. If you're an entrepreneur trying to do something new and innovative, you want to by definition be first out of the gate and one of a kind. That's innovation. If you go into a regulatory sandbox, it's for either they have said these are the topics we want to invite people, which means anything that you develop will be available to everyone because the regulators will say, yes, we have allowed for this, and now there's going to be 20 people on day zero. So it's not typically in the entrepreneur's interest to reveal their hand or to follow over the herd. And that's not on the regulator, that's on just the dynamics of the industry. The second challenge is, I think the more the regulators shaping innovation, the more commoditized it gets by definition, right? I mean, if you think of banking or insurance manufacturing or mutual funds, very large, very um, heavily regulated businesses, the good part there is if you have the license and you're compliant, you're guaranteed a successful business model. That's also thought through. And this is, whether it's in India or abroad, this is a consistent problem. We are trying to sort of share in the very large pie. The regulators and the incumbents are trying to obviously figure out, okay, what's the right size of the pie? And I think sandboxes don't inherently solve that. I think it'll take deeper dialogue and it'll evolve. I mean, it just does in every sector.
I mean, you've alluded to it. I don't want to put words in your mouth, but sort of this tussle between banks and fintech, for instance, is global. And it seems to be coming to a head again in India. A lot of the regulatory frameworks are, for instance, in lending, putting the onus on banks to make sure there is hygiene across the value chain. How do you think of alternative ways in which this accountability can be ensured? Because there's also a limitation on state capacity, on supervision. There's so many hotspots to monitor across the financial market itself. So how do you build that capacity in a participative way as industry along with the state?
Actually, in this one, I'll say particularly with the Reserve Bank, I think they've been really good about ascribing responsibility depending on the product line. So if you look at payments, the payment aggregator business got regulated only a few years ago, and they said that KYCing the merchants, if the fintech industry is going to be acquiring 90% of the merchants or 95% of the merchants, especially the long tail, then you should shoulder the responsibility. There's very little the bank can do from a distance. So they said that we're going to regulate you, we're going to define the rules of the game, and you will have to be compliant. And I actually welcome that. It cleans up the market some. If you look at lending, the risk inherently still lies with the bank or the NBFC. Both are regulated. And there is a genuine risk that fintechs get overexcited about the quality of their data and they just start saying, we start doing co-lending. I am lucky. My team was fed up with me for several years because we kept saying we will not do, say, BNPL, for example. We've never partnered with anyone. We've never done it. Because the whole idea of saying, I will just give cash to people so that they can go shopping and somehow their own shopping activity will improve the quality of their credit score is just ludicrous to me. Worldwide, it's a crazy concept.
This is where there may be a gulf between the engineers and the finance professionals, and perhaps
Of course it is. I mean, they're grown up. As I said, I mean, I have the luxury of being in my mid-40s, right? So I split the population. And you're old enough to be able to tell your own stupid is stupid. And some of stupid is stupid.
So, coming to the end of this, thank you, Sameer, for traversing very wide roads here. But what's next for you? Are you going to build an OS? Or what is it that you want to do globally?
We're definitely going to go and try and make Indus a world-beating product. I think it's one sector of the internet where, I mean, it's the gateway to the internet. It's like browsers in the desktop era, and there's not been enough innovation for the last 15 years. So I think that's one area we're super excited about. And the second, I think just given the forum and the discussion we just had, this be the year that PhonePe goes global. In fact, in the next couple of months, we'll be launching in a few markets. So that's what we're most excited about.
Thank you for announcing it at this forum. We're most delighted to hear this from you, and may many more Indian app companies go global. Since we have one more minute, the things that you think the Indian app ecosystem is getting wrong before we break for lunch. So we have something to think about.
I think fundamentally, consumers converge around the top 2 or 3 products in any given category. And I think when the market in any sector opens up, edtech, fintech, any sector, there's 300-400 VCs in the market. They end up capitalizing 300-400 companies in the sector, hoping that they'll get a share of it. And I think there's a lot of hard won. You're seeing it in a down cycle. You're seeing a lot of startups just flounder. I think we need to get better about just accepting when it makes more sense to have inorganic mergers and acquisitions and or choosing greenfield areas that may seem harder or have a longer gestation period. Too often one finds that if a sector's hot, everyone's jumping into it. And you can't have 100 companies delivering essentially the same service at the same time. So I think we can avoid a lot of that heartburn. Now, easier said than done because everyone is wanting to actually like embark on an entrepreneurial journey. But when I meet 20-some-year-olds, my one sort of caution to them is make sure you have enough thought put aside for what your moats would be, what your differentiation is, so that you survive the game. India is not an easy market, but India is a very exciting long-term market. So you need to play the long game.
Thank you, Samir, for who you are, because you think outside of your segment. We need much more such thought leadership. I suppose all the young people that you're talking about, they need more of this mentorship, and hopefully you can broadcast it to a wide audience in the years ahead. Thank you for doing this today.
Thanks, everyone. Thank you.